Hey, if you haven't been following crypto news in the last few days, you missed a pretty interesting moment. Virtual's protocol, or virtual as the crypto community calls it, just showed a completely unexpected jump of 17% in a single day. Yes, you heard that right. At the very beginning of 2026, when the market was pretty quiet and predictable, this project suddenly skyrocketed and became the fastest-growing asset among the top 200 cryptocurrencies. This was January 5th. At that moment, Virtual was trading around $1.03. If you've been holding this token even a month ago, it means your position has multiplied in value several times over. But let's figure out what exactly this project is and why people are paying attention to it. What is Virtual's protocol actually? Virtual's protocol is a platform that operates on blockchain technology. The essence of the project is to allow people to create and monetize AI agents. I know that sounds a bit complicated. Let me break it down for you. Imagine a virtual assistant, not like a chat with AI that you open in your browser. I mean a real working agent that can perform tasks, solve problems, and interact with other systems. Before, that was either impossible or extremely expensive. You needed huge servers, powerful computers, specialized knowledge, and lots of money. Virtual's protocol offers an open platform where any developer can create their own AI agent. And this is really important. Not just big companies like OpenAI or Google can create AI. Now anyone can do it, even from their bedroom. The project runs on blockchain. This means all operations are transparent, decentralized, and not controlled by any single company. The virtual token is needed to create and use these AI agents. Want to create your own agent? You need virtual tokens. Want to use someone else's agent? You need virtual tokens. The team behind this includes Jansen Teng and Wei Qi Tu. They founded this project with the idea that the future isn't big centralized AI systems, but many small specialized agents working on blockchain. The volatile history of price and what happened. To understand what's happening now, we need to look at the history of Virtual's price. Throughout 2024, the project was relatively quiet and unknown. But in early 2025, something changed. People started to like the idea of AI agents on blockchain. AI was everywhere. Everyone was talking about AI. And cryptocurrencies that somehow connected to AI started getting attention. Virtual's protocol climbed from small numbers to $5.15. That was January 2nd, 2025. That was the absolute all-time high the project had ever seen. People made money. A lot of money. If you bought at $1 and sold at $5, you made 400% profit. For some, that's what they'd earn in 6 months of normal work. But then something happened that often happens with volatile crypto assets. The price started falling. It dropped from $5 to around 70 cents over several months. This was really painful for people who bought at the peaks. They lost 85% of their money. That's what volatility means in crypto. Gains can be enormous, but losses can be just as big. By the end of December 2025, the price had dropped even lower, around 60 cents. Many people were ready to forget about this project. And then, at the very beginning of January 2026, the price jumped 17% in just one day. Why the price jumped in January 2026? This is a very interesting question. What happened that made people suddenly interested in this token again? Honestly, there's no exact answer. In the crypto universe, often people don't know exactly why a price goes up or down. That's because the market is very young, very small, and very speculative. But there are a few theories. The first theory is that at the beginning of the year, people often review their portfolios. They look at projects that have dropped 80% and think, maybe this is a good buy. Maybe this is already the bottom and the price will go up soon. The second theory relates to a broader trend. In early 2026, the entire crypto market grew. Bitcoin was at $92,000. This positively affects everything else. The third theory could be related to some news about the project or partnerships that people heard about. But I think the main reason is simply that the price was very low. On the crypto market, people often hunt for tokens that have fallen very low. They think, if it fell from $5 to 60 cents, maybe I'll buy and wait for the price to return to at least $1. This is called bounce hunting. And it's a very common strategy for speculators. Technical indicators and what they say. Let's look at technical indicators, which means what the charts and mathematical formulas show. At the beginning of January, the price was $1.03. The fear and greed index was at 25. That means extreme fear. People were very scared of this project. Volatility was at 935%, which is considered high. This means the price can move strongly and quickly. Over the last 30 days, there were only 12 green days, days of growth, out of 30. This means the trend was down. Some technical indicators showed that the price could fall even lower. There were predictions that virtual could fall to 68 cents over the next few weeks. But there are also optimistic signals. For example, the stochastic oscillator showed buy, which means potential for growth. Overall, technical indicators were mixed. There were signs of both potential decline and recovery. This is normal for volatile assets. Technical indicators don't always work, especially in the crypto market, where there's a lot of speculation and irrational movements. Analyst predictions for 2026. Analysts give very different predictions, and it's important to understand this. In the crypto universe, there's no single opinion. People look at data and draw very different conclusions. Let's see what different sources say. CoinLore predicts that virtual could reach around $1.74 by the end of 2026. That's about a 5% increase from the current levels at the beginning of January. Changelly says something similar. They predict a price around $1.65 by year end. But there are also more optimistic predictions. StealthEx predicts that virtual could reach a maximum of $10 in 2026. If that happens, that's a 900% jump. 99 Bitcoins says something interesting. They think that in the short term, the price could fall even lower, maybe to 17 cents. That would be very painful. But then they predict recovery and growth to $4 to $5 by year end. Digital Coin Price says that in 2026, virtual could be a minimum of $1.08 and a maximum of $1.46. You see how all these predictions are very different? Someone says $1.5, someone says $10. That's because the future is uncertain and predicting cryptocurrency prices is very difficult. Long-term predictions for 2030 and beyond. If we're talking about long-term predictions, the numbers become even more speculative. For 2030, some analysts predict prices from $2.16 to $5.6. But some become totally optimistic. CoinLore says that by 2030, virtual could reach $15.5. Price prediction even says $48. And if you look way into the future, at 2040, some predictions become absolutely wild. Price prediction predicts $494 per token. That means the token that currently costs $1 will be worth almost $500 in 14 years. But that's very, very speculative. You should take such long-term predictions with a huge grain of salt. Challenges and risks of the project. It's important to understand that Virtual's protocol is a young project and it has real challenges. The first problem is competition. Until recently, almost nobody was making AI agents on blockchain. But now it's become a popular direction. Alternative platforms have appeared. Even big companies are starting to look at this. The second problem is that the market for AI agents is still not completely clear. Exactly how will these agents be used? What's the real value? People are still experimenting. The third risk is regulation. Governments around the world are looking at crypto and starting to create new rules. This could help the project or it could hurt it. The fourth risk is that centralized AI systems might turn out to be better. For example, OpenAI or Google could create their own AI agents that work better and are simpler to use. If that happens, why would people need a decentralized platform? The fifth risk is simply volatility. The price could fall another 80% as quickly as it went up, and people could lose money. What you need to know before investing. If you're considering investing in Virtual, here's what's important to understand. First, this is not a company stock. When you buy a stock, you become a partial owner of a company. When you buy a crypto token, you just get the right to use that token in the system. These are very different things. Second, this is a very volatile asset. The price could double in a week or fall in half in a day. If you're not ready for these emotional roller coasters, this is not for you. Third, nobody can guarantee profit. Even the best analysts in the world are wrong sometimes, especially in the crypto market. Fourth, only invest what you can afford to lose. This is the golden rule of crypto. If you lose all this money, it shouldn't change your life. Fifth, do your own research. Don't buy just because someone on the internet said it's a good project. Read the white paper. Look at the team. Look at the technology. Community opinion. In the crypto community on Twitter and other platforms, people discuss Virtual differently. Some say it's the next big project that will change the industry. They say AI agents are the future, and Virtual's protocol is first in this space. Others are more skeptical. They say the project got hype, the price went very high, and now it's falling. They think the next buyers will lose money. A third group says it's a good buy at low prices. When something has fallen 85%, maybe it's time to buy? All these opinions have a right to exist. The crypto market is young and unpredictable. People could be right, or they could be wrong. Nobody knows. Virtual's protocol's plans for the future. According to the project's description, Virtual's protocol plans to expand the usage of its platform. One major goal is integration into the gaming industry. Imagine a video game where non-player characters are not just pre-programmed robots, but real AI agents that can think and make decisions. That would be very interesting. The second goal is integration into social media. Imagine you could create your own AI assistant on social networks that would help you with content, respond to messages, and so on. The third goal is robotics. The project plans that by 2026, 500,000 real tasks will be completed using AI agents. This means not just digital agents, but real robots that perform actual work. If these plans are realized, the value of the project could increase. If they're not realized, the price could fall. How to buy virtual and where to trade. If you still want to buy virtual, here's what you need to know. Most major crypto exchanges trade this token. Binance, Coinbase, Kraken, and others support virtual. The process is simple. You open an account on an exchange, go through identity verification, transfer money, usually in another crypto or through a bank, and then buy virtual. It's important to remember about fees. On exchanges, you pay a commission for buying. This could be 0.1 to 0.5%, depending on the exchange. After buying, you can store the tokens on the exchange, or you can transfer them to your personal wallet for better security. Final thoughts and conclusion. So, Virtual's protocol. It's an interesting project that sits at the intersection of two big trends: blockchain and AI. The price in recent days has gone up 17%, but that's only a small part of the story. Over the entire period, the price has been very volatile. Analysts give different predictions, from $1.5 to $10 in 2026. And that's just the beginning of the spectrum of predictions. The project has potential, but it also has risks. Competition is growing. Regulation is uncertain. Long-term success is not guaranteed. If you're considering investing, remember the golden rule. Invest only what you can afford to lose. Crypto is not investing in the classical sense. It's speculation. And speculation can be profitable, but it can also be dangerous. Do your own research. Look at the technology. Look at the team. Look at whether the project has real use. And remember, the future is uncertain. Nobody knows if virtual will be worth $1 or $10 a year from now. It's just unknown. But if you like the idea of AI agents on blockchain, if you like the project, and if you're ready for the risk, then Virtual's protocol could be an interesting position for you. Thanks for watching. Hope this was helpful.